Hi, welcome to this session of venture and capital interviews. Today I've got with me Arthur. Now I'm going to pronounce your name wrong, Arthur, and I always do, even though we've been working together for years. But Naoumidis? Naoumidis, so close. Now, look, I've known Arthur for years. We've been fortunate enough to be on the journey with DomaCom, for at least sort of 5, 6 years now?
Probably more like 7, I think.
7, yeah.
Yeah.
And basically, I wanted to get him on today. They've had a massive announcement come out recently that's had obviously an impact with their share price. But more than that, when I sort of explain to people why I love dealing with founders why I love dealing with founders so much is basically that effectively Arthur comes to mind, because no matter what's going on with the company, no matter what sort of challenges he's facing or anything like that, I have literally never seen Arthur without sort of energy and positivity towards the direction that he's going. And I think he really sums up the sort of what is at the essence of a founder, which is just absolute resilience and that focus on building I suppose, what you vision. So, Arthur, welcome.
Thanks, Steve. And look, it's as every founder knows, it's a journey, but you've got to keep focusing on where you want to be. Not necessarily all the difficulties that you've got to overcome, and then every now and again you get something sweet like we got with the ATO ruling.
And just to give people context, how long have you been, what is the ruling? And I suppose it'd be a good idea to go a bit of the history of DomaCom to help give context of why this ruling is so important and how long you've actually been working on it for.
Okay, there are 2 parts of DomaCom. There's fractional investing, and that's been live for a few years, and that's our core product where people syndicating to acquire assets, mostly residential properties, but other things as well. So that's starting to do well as well. But the other product is equity release, where people sell a bit of their property. And we were originally targeting just the baby boomers for whom super came too late. And it took us 7 years to get this property through ASIC to get it regulated. And it's taken us 1 year since we got the product to market last year to get this, the final tick from the ATO and get advisors, credited and the like. So it's a long, deep process costing millions.
And to give context, you said it took 7 years. How long were you expecting it to take?
2. So the reason why it's such a big thing is that, and in fact, COVID's doubled my market, but also COVID's provided a perfect entry, and I'll explain why. So firstly, the original target market for equity release baby boomers for whom super was too late. So they're 70, 75, 80 years old. They've got a big house, but they don't have superannuation, and so they're all running out of cash, and they need something to live on. So the whole idea is that instead of borrowing money with a reverse mortgage, you sell a bit of your house and you use that to fund your retirement lifestyle. It's a big market, but what we hadn't appreciated is that these retirees, by definition, because they have no superannuation, didn't have an accountant and they don't have an advisor. So they're hard for me to get to, right? This year, COVID has created another opportunity for us, another market, probably of equal size, but one we can get to. And that is the self-funded retirees. I mean, you've seen in this year, with the pandemic, JobKeeper, JobSeeker, Home Builder. The government's trying everything. The government's throwing everything at it, including the kitchen sink, right? And so they should be, and it's great. But there's one cohort that's suffering, that's in crisis, that the government hasn't, and at the moment can't do anything. And that is the self-funded retirees, because as anyone to do with equities knows, banks and everyone else slash their dividends. All these poor buggers they've spent their life, built up this big nest egg. Yeah. And 2 years ago, it was spinning enough income for them to live comfortably. It's now dropped 30, 40%. And a lot of them are struggling. So the thing is, what can they do? They can either start drawing more capital instead of income, in which case they'll have less income and it'll become a vicious circle. So what this ruling does is that it enables the retirees to sell a bit of the house and top up their super. Okay, so it's effectively, we call it adjusting your personal balance sheet, and it's much more marketable than a reverse mortgage. So retiree, we're saying, say you've got $1 million house and you've got a $500,000 super. Well, here's a way you can increase your super by 60%. your income by selling $300,000 from your house and put it into your super. Your personal balance sheet remains the same at $1.5 million, but you've just adjusted it down from non-productive asset, your house, and up your superannuation. So basically, now that sounds a very sensible thing, right? But the laws, the rules for topping up your super once you're retired, there's only one way you could do it. It's what's called the downsizer legislation. It's new legislation that the Liberal government put in 2 years ago, and it's great. And the idea is you sell your big house and you move to a small house. A lot of people don't want to leave their house.
Yeah.
And so what we've been asking the ATO and Treasury and everything else is say, we believe that the legislation allowed you to sell a bit of your house and top it up. And finally, Friday a week ago, the ATO agreed with us and saying, yes, you can sell a bit of your house and put it in your super. This is huge for our company because as a financial advisors, right, there is now a financial product that's been given the tick by the regulator. And guess what? We're going to be a huge marketing campaign because all the advisors must consider it. What are you going to do for your poor clients who are struggling?
Yeah,
you've got to do something. And I can tell you, in the FOFA world, providing no advice is still bad advice. You've got to provide some answer. So this is, clearly not everyone in the market understands this yet, but some people do.
And to me, that's what I love about you, right? You've got the patience to go and educate the market, to take the means required and to do what's required to go and educate. So what do you see now as that next step as far as for educating the advisors and educating the market?
Oh, it's quite easy. Not quite easy, but what we're going to do is we're preparing a national series of webinars where we're going to bring in, a legal person to talk about the lawyers, a SMSF technical expert to talk about the SMSF technical strategies, a FOFA lawyer to talk about the implications for your advice process, your best interest test obligations and all of this. And then someone else talking about the valuation. What does it mean to a financial planning business evaluation if all of a sudden you've got this other product? Because what does it do? It not only helps the retiree, it increases the size of the funds under management. So it's a win-win. The client wins, the advisor wins, provides a solution. But also the other benefit of senior equity release is that it requires you to engage with the children of your client. Immediately helps you with intergenerational wealth. It's, because eventually the children will inherit the assets. So you now have an absolute reason to engage with the children. So as this year progresses, and frankly, I'm not aware of any other product in Australia that complies with this legislation for equity release. Because it must create what's called a CGT event. So reverse mortgages do not comply. So we're the only game in town is what we believe.
Interesting. And how do you, as far as, let's say the situation of that person that does have the $1 million house, they are looking to sell part of that house. How do you envision that process working? Where does the transaction get done? All that sort of, interesting mechanics.
The thing is, So that's where the devil's in the detail. And, so this is a financial product. It operates under what's called a ASIC relief instrument. So, it provides a framework and it requires the investors to have full a statement of advice. Okay. So they just can't come to DomaCom and get an equity release. They must go to an advisor. So this is the other thing we're going to advisors is that we're going to market this to retirees, but then we're going to need advisors to service these retirees. And so it's like business development, we'll give you leads. Okay. So that's the carrot we're offering to the advisors. The ASIC instrument is quite prescriptive. The advisors must do this. We've got to show forecasts, in terms of what the equity release means to the retiree. They've got to do Centrelink. And this is why we took so long in doing it because, equity release at the moment comes in several forms. It's either a credit product, in which case it's a mortgage broker, or it's a real estate product, in which case it's a real estate agent. Now, we took the extra years to make it a financial product. And the reason for that is that who do you reckon should be looking after these poor vulnerable people? Should it be a real estate agent?
Yeah.
Nah. Should it be a mortgage broker?
Yeah.
No. It's got to be someone who's got best interest test, fiduciary duty, and complex needs like Centrelink implications, estate considerations. It's a complex area, so it needs to be a financial advisor. So the reality is that we've got to bring retirees together with advisors, together with investors, because that's the other bit of the equation is that where are you going to get the money for this? Now, eventually we'll get institutions, but look, the Australian institutions are so short-sighted. We're probably going to get it from offshore, right? Because offshore is the big pension funds provided. But also a 45-year-old or 50-year-old with an SMSF, they've got an investment horizon, which is 15 years plus. Well, for 15 years plus, they're going to get 3% income, cash guaranteed. There's cash in an account paying it, plus they get the capital growth of that residential property. I challenge you to find an investment that gives you such an attractive return profile in this market.
Yeah. And like when, as this sort of ruling come out, I was obviously noted the sort of difference it made in your share price. Like, what has been the conversations that you've been having, not just with your own sort of shareholders, but just with the market in general, sort of following the announcement?
Look, the main feedback I'm getting is from the advisor market. It's creating waves. You know, it's really rippling out because this is a huge thing. You know, we're talking a cohort of hundreds of thousands of people that need a solution. We need to do something. We can't leave them starving. Okay, and nothing the government's done. Now, the reality is the government's helped me with this because it was one of the ministers, Tim Wilson, helped me to get the ATO to look at it. You know, so basically, this is a concrete measure to help retirees help themselves.
Yeah, and the best part is it's not debt. It's effectively leveraging off an asset that they already have. Yeah. And do you, like, in your mind, do you sort of foresee that, you know, the way this could be set up, even though it is sort of run through a typical advisor, and you mentioned about the sort of the passing down of wealth, is it likely to be the sort of kids or the sort of participating in that as far as acquiring that part of the house?
Well, that's one of the
asset?
Yeah, and that's in a lot of cases, what happens is that the children don't want the parents to have a reverse mortgage and everything else because they're trying to protect, you know, they want to keep that house in the family and everything else.
Yeah.
Well, here's a way you can do it, is that children can actually provide the equity release on an arm's length basis. There isn't any, you know, issues about getting your money back and everything else because, you know, our structure ensures that. So that way the family group can help the mum and dad and still create an investment. So in other words, you know, you don't need to fund a stranger's place. You know, you fund your own parent or uncle or grandmother or whatever it is, and it's a valid, proper investment for your super.
And for you now, what do you see as, I suppose, obviously 2020 has been a surprise for everyone, and said some people have benefited from it, some people are still struggling with it. How do you see your sort of next 6 to 12 months playing out?
It's surprising. The pandemic has really created some opportunities for us. So we've had to, you know, in March when it started, our normal resi thing stopped dead. Okay, but very quickly.
I think that was the last time I saw you, by the way. I think the last time I saw you was literally like Feb 28 or March 1st.
I know, but so right now we've got a couple of product lines that are doing really well, like the rent to own, which is property investing, but we've put an element there where the tenant gets gifted equity. So the tenant gets 1% equity for 5 years. So it's creating a tenant incentive. So the idea is that if you're worried about vacancy in the next couple of years, which everyone is, you need to invest in a property that's less likely to be vacant. And we believe this is the case because if you're a tenant and you've got 4 properties to choose from and one gives you equity, which one are you going to rent? That one. Okay. So the proof of the pudding is there. We did our first syndication in the middle of stage 3 in Melbourne, and we're just finishing our second syndication here in Melbourne in stage 4. Okay, so this is something that the market likes, and so that's going to grow. And then at the same time, we're doing things like the affordable housing version of that's coming. And then clearly this downsizer is going to, you know, we put a lot of time and money, you know, 8 years into the senior release, millions of dollars. It's a hard thing to start. All of a sudden, I've got this catalyst, this driver that's going to, you know, the financial planning industry must consider this. Now it's been given a tick. And so we've now got several channels that I think are going to, you know, fire well. So this financial year is going to be absolutely fantastic for DomaCom.
Well, mate, I was really happy for that announcement to come through. As I said, I've long been a supporter of yours, and I said I'd probably mention you at least every 2 to 4 weeks. As I said, when I think about why I like working with founders and the general nature of what it's like to be. So when I see that you being able to benefit off, or you being able to, your solution that you've been working towards for years perfectly suit this type of environment and pretty much set it up so well. I was like, I was super happy for you personally. So
not as happy as I was.
I bet. So mate, congrats to you and your team. Really appreciate you sort of taking the time to have a chat with us, and all the best over the next, or sort of for the rest of this year and this financial year, obviously.
Yeah, look, thanks, Steve. And look, it's been a journey with that. I'm glad to have shared with you and a lot of your subscribers, and members.
Thanks, Arthur.
Thanks, Steve.